Hello, everyone. Hope you're having a great weekend so far. As we head into the new stock market week, the past week was overall very successful as the sell off on Thursday and Friday that led up to the Paris attacks were immediately supported, and the market rallied throughout the week, with the Nasdaq finding support basically right at the 50-day moving average and retaking the 200-day moving average, nearing new highs again. The Nasdaq 100 never even went below the 50 and 200-day moving average and remains in a very strong overall uptrend. The one disappointing note is that volume's been below average the entire rally on the Nasdaq 100, but on the Nasdaq, at least there was one day of above average volume gains that on a significant price move. So overall, the action's good. It's not great, but considering what we had the previous week, everything is pretty good. We remain fully invested here, despite the market being well off the highs. And I would think that that's an indication, especially since I have a ton of long positions again. I would think that that's bullish going into the end of the year. However, I'm always ready for everything, and if we move back below these lows here in the Russell 2000, or especially these lows, I could see us easily testing those October lows again. But for now, I just have a lot of solid patterns out there. They could fail. It's always possible. But when you're dealing with this many good-looking charts, and, if I was only getting a few long signals here or there, but once again, that's been the case. There's no great signals, but there's signals. I'd feel stupid if I didn't take them. So, we've piecemealed together a fully long portfolio, and everything seems to be looking pretty good. The few stocks that I have losses on, I think my worst loss is on an end-of-day basis is less than -4% with MLAB, and I'm already completely out of it. I think Monster's my worst holding name right now since initiating a long position. It's down 2.5%, so that's my worst holding. So everything is going very well. Now, it's my worst holding now because we had some stocks completely fail on Friday. PDCE is closing below the 50-day moving average on extremely heavy volume and closing below those recent lows, the 1113 lows. So PDCE is a full sell. I'm already out of it, so nothing for me to do there. And the worst stock intraday was AMWD. Can't quite remember where I got long this name, but I think it was right here with this breakout because I had buy stops. It was holding in the entire time, but it just completely broke down on Friday on very heavy volume in red bop. I had two sell stops, one right below here and then one right below here, and it sliced through both of them, closing lower. So AMWD is a full sell. And then my SRS hedge has now failed. Didn't think that was going to happen to it, and it could still turn out and work right. I mean, this could easily find, higher lows and then continue to work higher, but my final sell stop was this day's low a day, and it actually is closing below that level. I think it was like 46.42. Yep, 46.42, and it's closing at 46.37, so SRS is a full sell. CLLS is closing below the 20-day moving average on above average volume, so that is also a 50% sell. And APLE is closing below the 50-day moving average on no above average volume, but it is its first close below the 50-day moving average. And basically, since going long, it's done a whole lot of nothing really. So that's a 50% sell, moving the capital to better signals. And on that note, quite a few signals again. Here's the ones I'm passing on because they're speculative. EPRS, that's a nice move off the lows. VNET, I think, has earnings on Tuesday, so that's definitely a no-go. NLST, nice earnings winner, still looking good. GTN, a pocket pivot point signals it attempts. It looks like it wants to break out of this pattern, but my internal indicators just aren't strong enough to go ahead and take it. And then CRM, if it would have closed more near the highs, CRM definitely would have been a new long position, but it closed too far off the highs. So I'll continue to wait on CRM. Now we do have one new long position and actually three add signals. Nothing's perfect at all, nothing's great, but let's first get to the new long. Cray is a new long basically because I don't think that this thing is going to build a long enough base before I can get in before it decides to explode higher. I was tempted to buy the name back here, and if I would have done that, I'd be long at 33.48, and it's almost $1 higher now, so kind of, regretting that. Also was thinking about buying it here, 34.10 would have been filled at 33.85, and it just continues to inch higher. So I think I'm going to go and get long Cray now with the sell stop below these lows right here, 32.21. But I just have a feeling it might go ahead and break out now, and by the time it breaks out and gives an end of day signal, it might have moved too far too fast, just like VLRS did. Earlier in the day, it looked like it was going to be a great ad signal on Thursday, but it just moved too much and closed up 7% on Thursday and is up another 4% plus on Friday for a total move of 12%. So, I don't want to have that happen on Cray and miss out on another one. So I'm going to go ahead and take a long position here. This CanSlim quality stock was a recent earnings winner. It was also confirmed in my price. It was also confirmed in my Max Green BOP for 5-day scan, and it's actually had Max Green BOP for over 10 days, so even better. But Cray is a beautiful technical pattern here after that earnings spike, continuous accumulation, pullback on low volume, and looks like it wants to resolve itself higher. Should have probably started to get into it that day, but it isn't too much higher. And whenever it breaks out, it has another potential big move. As you can see, this moved off the ones up to the 30s back in 2008. So, Cray could be impressive. And then also Inflex got long finally a few days ago on this pullback signal, pocket pivot point signal there. It's now breaking out of a cup with handle pattern. I guess the cup, the handle pattern is a little deep, so it's a deep cup with handle pattern, an incorrect cup with handle pattern. But the previous uptrend, so much accumulation on the previous uptrend, and then it downtrends, and actually the heavy volume you see on a weekly chart indicates that it was more support with all the tight trading weeks and all the moves off the intraday lows, all the tails. There's just tails on every down week, and then finally built a handle on low volume, and it's now breaking out on a pocket pivot point signal with the volume and BOP surge. So it's a new long. Since it's an ad signal, since normally they're 2.5%, it's like 1.25%. It's also confirmed in the price volume BOP scan, so that's another 0.5%. So this is going to be a 1.75% ad signal. FSB, CanSlim quality stock. I know BOP is going in the wrong direction, but the earnings and sales growth and future estimates are just absolutely bullish looking, and look like, if this does happen, this company, it's got some great fundamentals. I just don't see, I'd feel really foolish even not buying this stock and seeing it break out simply because BOP was going in the wrong direction. So FSB's CanSlim quality, it's an ad signal, so it's technically like 1.25%, and then it's also an IPO and an earnings winner back here. So I'll give it another 0.25% to make it 1.5% ad position. So FSB 1.5%, final sell stop back here. I forgot to go with the final sell stop on Inflex. Obviously, it's going to be probably, I don't think I'm going to let it go all the way back here, so it'll probably be these lows here, whatever that low is there. 21.45 on Inflex. And then the final ad signal, JBSS. It's the best one. They just announced a dividend also, so now they have a dividend coming up. But pocket pivot point signal on a bigger even volume surge. Remember, we got a long signal here, no pocket pivot point signal. But now we got a surge in volume, BOP, pocket pivot point signal, and the stock is closing higher than where it opened. CanSlim quality and perfect speculator scan quality. It is one of 28 stocks that qualify for this scan. Or is JBSS? Wrong scan. It's the pre-perfect speculator scan then. JBSS. There it is. So it's in the pre-perfect speculator scan. Sorry, everyone. So pre-perfect speculator scan quality, one of about 54 stocks in the market. So JBSS is going to get, for an ad signal, 1.25% for being pre-perfect speculator scan quality, 1.25% for being CanSlim quality, and then another 0.5% for being price volume BOP in my price volume BOP surge scan. So a total of 3% goes into JBSS, 1.5 in FSB, 1.75 in Inflex, and Cray gets 3.5%. And Cray is the best chart out there, but Inflex is, an even nicer long-term chart. But a lot of bullish patterns out there, everybody. Going into the historically bullish holiday short and Thanksgiving week. So we'll see if we keep on moving up. If we are, great. If we don't, we have our stops.